Hey, how's it going everybody? Mike Weber here. In this video, we're going to talk about what happened in the local real estate market here in the Los Angeles area for the first month that just ended January in 2022. So getting started, let's just talk about what's happening in general in the real estate market and what I think is going to be probably the biggest factor that's going to influence what happens or what we see moving forward. And that is the Federal Reserve is supposedly going to start raising rates. They're going to start a cycle of raising rates very gradually. Apparently, the first rate hike is scheduled to be around March. And then they say they're going to continue doing, 0.25% rate hikes or somewhere thereabouts for a year, 2 years, whatever it's going to be, and that's going to ultimately raise rates up a couple percentage points in terms of the federal funds rate, which of course transfers over to mortgage rates at a higher amount. So mortgage rates generally are going to be a couple percent higher than what the federal funds or the overnight rate that banks use that the Fed sets. So what does this mean? This means that we could have interest rates going into the 4.5, maybe even 5% over the next year and a half, 2 years. Now, is that going to impact the real estate market? I think definitely. If that actually happens, which I'm not really sure that it's going to, if it does happen though, that is definitely going to put some pressure on home prices. There's no doubt about it. Rates cannot go up by 1.5%, 2%, and we not see the results or the impact in terms of prices or demand in the real estate market, etc. Because as those rates trend up, imagine as rates go from say 3% to 5%, that's a huge increase in the cost of financing a house, which is going to transfer to a much larger payment that a would-be buyer is going to have to pay for a home at any given price point. And that's definitely going to reduce the demand that we're seeing out there in the market. Now, that said, there's almost no inventory on the market. So the question is there going to be enough buyers who can still afford to buy at those higher payments with those higher interest rates? Or are we going to start to see more and more demand leave the market as a result of those rates going up and maybe more of a stabilization or a flattening out of real estate prices moving forward? Another thing that happened is that Los Angeles County extended their eviction moratorium until the end of 2022. So that's going to be a big impact there for a lot of landlords that have had tenants that haven't been paying rent or they're struggling to get tenants out. That got kicked down the road. I'm sure a lot of cities are going to do the same thing if they haven't already. So a continuation there of some of that same policy that's certainly having a very negative effect for some people and possibly a positive effect for other people. So let's go ahead and jump in. We'll take a look at the actual numbers themselves. We'll first start with Los Angeles County as a whole, and then we'll take a look at a couple things in the South Bay beach cities. So first off, in Los Angeles County, median home prices are up 14.4% compared to a year ago. So still very strong median home prices. However, we've seen about 6 months now where prices have really just kind of gone sideways. Now, if we take a look at inventory, we're seeing the same thing in Los Angeles County that we have been seeing. We're down 40%. In terms of inventory compared to just 1 year ago, which was already a very, very low inventory year, as you can see on the graph here. So if these conditions continue where there's just no inventory to speak of, we're probably going to see a lot of competition out there for whatever properties are being listed. Even if rates, rise slightly, the real question is inventory going to finally start to rise, into the middle of the year? Or are we going to remain subdued throughout another year with virtually no inventory to choose from? We're going to have to keep an eye on it. Definitely going to be interesting to see what ends up happening. Finally, we do have closed sales down 11.8% in Los Angeles County. Now that's a pretty big reduction year over year. Of course, a lot of that is probably attributable to the such low inventory levels that we're facing. So there's just less sales that are able to take place as a result of a lower amount of inventory being available on the market. Now, if we take a look at the South Bay beach cities, we see that prices are a little softer there than we're seeing in Los Angeles County as a whole. We're up 10.5% year over year. And in the South Bay beach cities, as you can see on the graph here, we have seen prices kind of taper off and kind of fall over the last 6 months, whereas in Los Angeles County, they've remained pretty level. In the South Bay beach cities, they've slightly tapered off. Now, of course, as we start to enter into peak selling season, there's obviously a high likelihood that prices are going to continue rising again. But in any case, maybe with the rising interest rates, maybe they won't end up rising. Maybe they'll stay flat for a while, or who knows, maybe they'll start to come down somewhat. We'll have to see. And finally, if we look at inventory in the South Bay beach cities, we're actually down 52.9% to where we were just a year ago, which was already a very low inventory year. Now, if this keeps up, it's definitely going to create problems. If inventory stays, at 0.8 months where it is now, or stays relatively low like that, that is an unhealthy level of inventory to the low side, and certainly that is going to make it difficult for buyers to purchase homes, and it's going to be a complicated and difficult market throughout the year unless we really see a jump in inventory, which certainly there's no indication that we're going to see anything like that anytime soon. So I hope this information is useful for you. If I could help you with anything real estate related here in the Los Angeles area, definitely reach out. If you haven't subscribed, go ahead and do so. Give me a thumbs up if you like the video. Tell me what you think is going to happen in 2022 with interest rates and the real estate market in general. Really appreciate you guys watching, and I look forward to seeing you on the next video. Take care.